Good morning, traders. Paul here with GammaEdge. Today is Tuesday, May 30th. My wife and I are celebrating our 30th anniversary today. Let's get started. Pause your players here. Read to the very bottom. If you agree, hit that play button. Summary for today. Obviously, with Friday's action, we were anticipating an upward move, and we got it. The zerodt and 1 to 3 day swing traders are in the middle of the bull that we saw on Friday. We had a continuation day of that anticipation. We saw a reversal potential into Friday morning, and then of course we saw some targeting later in the afternoon that pulled the CT higher. That success begat success, and away we went. So we are now above the previous day. That is a trigger day up. We also have what we call the railroad track pattern. You'll see that on the next slide. That reversed and signaled a new long. So that too is a trigger day up. None of these are predictive, so be aware of that. Don't get out over your ski tips. Read the tea leaves as they unfold, but suffice to say, bullish on Friday, and we're anticipating some bullishness possibly today. You'll see why here shortly. The long-term market model remains bearish. The CT, the cumulative tick, needs to cross above from below, and we're not there. Again, you will see that on the next slide, what exactly that means. Transitions, we closed at 42.05. The lower transition in the complex is 41.85. It's up significantly from 41.40. The upper transition is in this 41.90 to 4,200. We're kind of weak in the 41.90, 41.95 zone, so we're going to take 4,200. So this Livermore level becomes a first bow shot, warning across the bow there. If we do fall, we could play around in the 41.90, 41.95 zone, which is a sweep zone, meaning that anybody who puts their stops down there could be taken out just by algos. We would want to take that 4,200 level and want to push higher from that level. If we don't take the 4,200 level, we could get trapped, and you'll see why here shortly. Minus GEX is 3,900, plus GEX is 4,300. There's little fear from 3,900 up towards 42. What this generally means is that we're not seeing a tremendous amount of puts being added to the complex. When we see that, we get a little bit imbalanced, and you'll see that on the last slide, what we call the landscape slide. For the zerodt folks, we have a lot of them in the Discord, able to use this information on a short-term basis, and we've been in a short-term market, so it's actually worked out very well for them. 41.95 is the P-trans, positive transition zone. 41.90 is N-trans. So we are looking as this as a very tight, very well-defined transition for the zerodt today. The upper charm strike's 42.40. That means that if we move above that, what was being viewed as resistance could become support. We saw this on Friday through the targeting action, so I want to pay attention to that. To the downside, 41.85 also could be supportive. Now, if we lose that, it'll become overhead resistance. Note we have a double structure, so we have this 42.40, 42.45, and we have a 41.85 and 41.80. You'll see that on the zerodt slide coming up here. Very important. This is a duplication of the structure that we had going into Friday, and we saw targeting on Friday that was above that upper structure, and that's why we pulled higher, or at least why we think we pulled higher. When we see that targeting, it means that what was overhead resistance now becomes support, and you can play off of that very, very easily. Watch value SPXP for intraday targeting and playing accordingly. The cumulative tick, as I said, we've got really 3 time frames superimposed here. In fact, we just posted a Twitter thread this morning that goes into this again and explains some of this. So we had this reversal. We talked about on Friday morning before the open, we talked about this condition existing where we were stabilizing. And when we stabilize like this is a characteristic, especially a midday stabilization. It does set up the course to be able to move north. And of course, we moved north right out of the starting gates on Friday and moved upwards. So the instantaneous cumulative tick closed higher. That's just a short-term indication for the zerodt folks. Play the trend accordingly, and again, I would urge everyone to go review the Twitter tweet that we sent out this morning. Note here on the railroad track pattern, we get this crossover right here. This is now confirmational that the trend is intact. It doesn't always work out that way, but note when we catch the trend, it can persist for several days. So this is appropriate more for the swing traders. Every trade begins with a intraday start, or the 0DTE folks. So note that you've got two things filling your sails to the north, and be aware of that. Again, not predictive. We don't know the direction this is going to go. It can certainly reverse. We could go horizontal, as you see here. And there's been a history over the last month and a half of going horizontal, so just be aware of that. Long-term, bearish. When you see this type of crossing behavior, this is more to the downside. And this is not a surprise for those of you who are students of the market. We could be seeing a bear rally within an overall downward structure, and certainly this is telling us that this movement down, especially with a horizontal structure here, this movement down is a sell-off. We could get this bounce, we could reverse downward, the red arrow, or we could continue north, the green arrow. If we do cross back over, we'll see this tighten again and, chop, 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 what we've been living as trend followers for the last 6 weeks. There's been some discussion about, the model needs to change, et cetera, et cetera. No, it doesn't. It does not need to change. You need to shorten your time frame. When the long-term models are choppy, there's no trend. It's that simple. So watch the shorter-term trends. I know that sounds very strong, and I don't want to come across as too strong there, but when the ribbon is horizontal, as you see here, there's no trend. So don't try to tease something out of the data that it's not going to give you. Taking a look at the gamma structure, very positive, call-dominated structure. You can see below us, the in-the-money calls are dominating with the exception of this strike at 41.85. To the north, the out-of-the-money calls are dominating all the way up to the JPM strike. This is the end of June, 43.20. There's 39,600 short calls at least sitting up there, and that is putting a lot of pressure and probably represents a short-term upside limit to where we're going. COI is sitting up here at 4,300, nice Livermore level. Here's that double structure that we were or triple structure here. You'll see it come into a double structure for the 0DTE. Transition sitting right in this zone here at 41.85, 41.90, 41.95, 4,200. Be aware of that. We're just sitting just above it with the yellow line. So we're not stretched. It's no surprise that we went into this area for the weekend. It's pretty much a low exposure in terms of gamma area, and the deltas are not heavily weighted, although you do see we are a little bit above that 41.95 delta of 646 million delta notional. Taking a look at the 0DTE, pretty clear that we've got this double structure below us, double structure to the upside. We talked about this Friday. This was the setup into Friday, and you saw that we took through targeting, intraday targeting. We saw that 42.40, 42.45 come into play, and certainly with that action on Friday, we pushed higher. Today, we've got the 42.40, 42.45 playing, and this is going to potentially move us north if we see targeting above that. So keep that in mind. What is overhead resistance could become support, and play it accordingly. To the downside, that 41.80, 41.85 for the 0DTE folks, very important for today. If we lose the 41.80 zone, what was supportive could be now overhead resistance, and we could actually drop, although you can see that 41.20 is pretty far down. That would be the next place we would anticipate falling to. More than likely, we will stall if we lose that 41.80, 41.75 zone. There isn't a lot to pull us down there in the 0DTE, and when you take a look at the 1DTE, which is here, you can see that the 41.75 and 41.50 zones have got a little bit for tomorrow, but not a lot. The key takeaway here for today, the expiry today is a net gamma positive, so more calls coming out, short-dated calls are coming out than our puts, and you can see that the out-of-the-money calls above us are vaporizing. They will have to be replaced if we are going to continue this bull. To the downside, you can see the 4180, 4185. You got some certainly some puts that are coming out of the structure. Fairly a large amount of those puts are coming out of the structure today. But again, we have a lot of calls in the money calls that are going out. Typically, in the money calls are not replaced, but you can see the magnitude, relative magnitudes of the calls that are being expired today is not that significant. Looking at tomorrow, though, it's a different story. We have a lot more calls coming out. Could see some weakness in general. Want everyone to pay attention to that. That 4250 line is pretty dominant to the upside. Depends on where we are headed for today, of course, and where the targeting is. We like to see out of the money calls being inserted into the complex, and this is where they could be for tomorrow, they could be for the balance of the week, which we'll see here shortly. Parking zones for tonight: 42.15 in today's close would be a candidate, 42.35 would be a candidate, and 42.45. If we take 42.50, of course, parking just above that at 42.55 would also be a candidate. To the downside, the 41.75, we're not really anticipating a lot of falling. 41.90, 41.75 are possibilities, but again, the structure isn't necessarily supportive of all of that going into the close. Looking at the balance of the week, pretty interesting structure here. Again, net calls coming out for the week. They need to be replaced. Highly path dependent. So this 4180, 4185, as you saw here in the 1DT or 0DT, excuse me, is coming out. So this will vaporize this week. To the north, we've got this 4240, 4245, 4250. It's overhead resistance right now. It will become supportive. We can push higher than that, and clearly you can see for the week that we've got a lot of calls up here at 4,300, and gamma structure tends to fall off above that. So clearly for the week, there are a lot of speculators in the market who are targeting that upside move to at least to 4,300. Combo complex, really the same story. We've got out of the money calls dominating to the north. We've got in the money calls dominating to the south. Really no presence of the downside speculation, as I talked about, and so it is what it is. Combo structure, this is the landscape view that I was talking about earlier at the beginning. Right goalpost, 4,300. It's extended. It's up pretty high, so there is an anticipation of moving up to 4,300 in general. To the downside, left goalpost is 3,900. Note, fairly weak. And also note this line that I drew that is descending towards us. This is an unusual setup for the downside. Basically, it shows no fear. Typically, when we have anticipation of a downside move, this line goes the other direction. It goes from, say, where minus GEX is down towards 38, 37, 3600. We're not seeing that right now. What we're seeing is basically the growth of that 4185, 4180 zone, which we've talked about. That's the double structure that comes off in the 0DTE. We've got this 4175 line. Below that 4175, things change. So the key takeaway for everyone here is that although there are a lot of puts in the complex, no question about that, the short-dated puts that are in the complex from a gamma perspective are asymmetric, and this is not a normal setup. Liquidity is relatively poor. If we do fall, there will be some monetization, no question. That will prevent a first wave of movement downward. If we get a rally off of that, or if we start a second wave of pushing downward, there's going to be fewer puts. You can just look at the asymmetry that exists here. Remember, we closed at 42.05. You can see that there is a tremendous amount of asymmetry between the call structure and the put structure right now. So somewhat imbalanced, somewhat lopsided, and not really protective of the downside. So this is cautionary, and want everyone to be aware of that. So that's it for today. If you have any questions or comments, come on into GammaEdge.us. If you go to that website, click on the upper right-hand corner pricing tab, fill out the blanks, 14-day free trial, all the tools turned on. Come on in. Great group of traders in voice. We're talking all the time. We have a morning session at 9 a.m. Eastern time. Most days when available, and we go through what we're seeing. Follow us on Twitter at GammaEdges with an S, and then here on YouTube. Two things. If you like today's commentary, go ahead and hit that thumbs up button. It gives me immediate feedback that I'm providing content that you find useful. And two, subscribe, because we are posting videos of what we see and want you to see what we see when we see it, generally before the market opens. So with that, I bid you farewell. I will not be on today. doing my anniversary with my my bride of 30 years, but certainly will partake the rest of the week. Hope everyone has a great week, and thanks for watching this far. Take care.